Hey everyone, Kegan here, and today I'm recording the 6th video for the RM Live series that me and John deRoulet have been putting together. I'm still working in the same portfolio in the Charleston, Asheville area, and today I'm going to take a look at some post-performance for March and April. Now that we've gone past those months and are now into May, I want to check and see how we did year over year, take a look at some market trends as well, and then take a look into the summer months a bit since they are quickly approaching, just to see where our rate position is and see if we're in a good spot. And yeah, so let's get into it. Minimize my face here. So I'm actually currently on the bookings page within Wheelhouse. I've gone ahead and filtered down quite a bit, so I only have 51 total properties. I'm really looking at two filters here. I'm looking at the Charleston area, and I've also brought in properties that were tagged for move-in date for 2023 and prior. So that when I'm looking at this year-over-year performance, I'm comparing more apples to apples versus including new properties that have been brought on in the last 4 or 5 months, just to give myself a better idea of the year-over-year performance and comparatively better, and I think in that regard. So taking a look here, what I've pulled up is pink is this year. So pink for occupancy is the bar charts. The dashed lines are ADRs without fees. Occupancy is adjusted occupancy as well, so removing the blocks from the denominator. Green is same time last year. So for months that have already passed, that calculation is set in stone. For May and onward, this is looking at by date. So today's May 16th. So it's looking at as of May 16th, 2023, what was the occupancy for each of these months and comparing. So that's what we're looking at here. We can see that for the months that have already passed, March and April, last year's occupancy was slightly above, actually about 2% in each month. ADRs were also slightly above, but pretty close in line. Let me zoom in here. Maybe we can see this a little bit better. So yeah, March and April, pretty close year over year for these properties that have been around for a while. But I would say, slightly down overall. If we looked at RevPAR, it'd be right in line, not too far off. Looking ahead a bit, we are definitely down occupancy-wise and ADR in May compared to same time last year. I'd have to look and see where we finished at in May. Obviously, we still have some time and a bit of occupancy to sell, about 15% that's available. But what's interesting is that story flips when we get into July, August, and onward. We're actually well ahead as far as occupancy goes for these months. And we can see in the last 2 weeks how we've been making some sales. So the highlighted tips on each bar is highlighting what's been booked in the last 2 weeks. ADRs are definitely lower in the summer months compared to last year, especially in August. This is kind of an interesting blip there, that ADR last year. So the early bookers must have had a pretty high rate. But yeah, this kind of gives me a good idea of where we're at. Definitely behind a little bit occupancy-wise, ADRs as well, especially in August. That's interesting. I want to take a look at the market a bit more and see what's going on there. But couple notes here. One thing is, I imagine there's been a lot of growth in the market, like many others. Went ahead and went to market intel for Charleston just to take a look. Now, this is a more broader, like regional area. It's not focused solely on like downtown Charleston like I was just looking at. But this for the general area. We can see the trend on bookable nights, meaning number of nights that can be booked by a guest, excluding block nights, in the market area, has steadily increased, especially between 2023 and 2024. We can see quite a bit month by month for the months that have finished. Jan, Feb, March, April. I mean, the trend is pretty apparent there. So I'd imagine, more inventory, harder to, gain a higher occupancy number. And so I think being more competitive, which is what we are, I think, trying to do, me and John, we're trying to do with this portfolio in the summer months is, in my opinion, a better bet than rather than trying to chase that curve and wait until the last minute to drop rates. I think we'll be less disappointed if we start out lower and build up as we see the compression in the occupancy come in. So let's go ahead and I actually brought up Key Data as well, so I'm going to hop over there. I just wanted to take a look here in Key Data to see what their market area performance metrics are looking like. This is more honed in on the, I think, downtown Charleston area, which is what I've selected here. Only about 3,200 properties being pulled in, whereas when I was on the Wheelhouse market report, I was pulling in like a regional area, which was about 6,000 or so properties, I think, overall. But we can see right here, I've pulled up RevPAR year over year, same time last year comparison, so just kind of like what I was doing on the bookings page. And we can see that generally RevPAR has actually been right in line year over year for the first 2 months, Jan and Feb. March definitely performed slightly better, actually pretty $20 in RevPAR better for the month. Now that's, I think you can see it's pretty apparent to me that's just most likely due to Easter being flipped, right? Easter being in March this year versus April last year. So we can kind of see that year over year difference in April as well, the decline. And then looking into May, this is same time last year. So May hasn't finished yet, but we will see the 2023 numbers go up. I would have to look at ending. I could probably, actually I have that pulled up in another tab, so I'll show you in a second. But same time last year for May, definitely down. Same with June and July. It's especially apparent in July. RevPAR, I mean, compared to same time last year in this area is like much, much lower. So to me, you know, it's more competitive out there. I think people are probably posting pretty high rates. We can actually take a look here. I have another tab. Let's see, why isn't this loading? Let me refresh this real quick. All right, just had to give the page a quick refresh here. So what I've pulled up here is looking at last year's ending ADR and occupancy. So the solid or less opaque bars here. Last year's ending ADR and occupancy compared to same time last year ADR and this year's ADR and occupancy. So we can kind of see a similar trend, right? We were just looking at RevPAR, which combines both these metrics, ADR and occupancy. But this is nice to break it out because I can kind of see what is driving that the change year over year in the RevPAR. To me, actually, ADRs have been right in line in January. ADR and occupancy were right in line. Same with February, pretty close. In March, we see actually a slight increase year over year in ADRs. Again, that's most likely due to Easter being in March this year. And then in April, we actually see a decrease in occupancy year over year. Again, makes sense. Easter being in April last year probably garnered higher occupancy overall. What's interesting is that even though Easter is in March this year, the occupancy actually was the same for March, but the ADRs were a bit higher. So ADR picked up the slack for what we were seeing in this RevPAR increase in March versus the April decrease in RevPAR was actually mostly due to a decrease in occupancy. So kind of interesting flip there. And then looking at May, we're actually right in line in this area with ADR and occupancy. Actually, ADRs are slightly higher. Then looking into June, July, and August, we can clearly see what was happening here with the RevPAR, where we were noticing a big leap year over year. Current ADRs, of course, early bookings, people are probably holding the rates a bit higher for June, July, and August. Current ADR is much higher, right? That's generally skewed. You see that even in your own data if you look at it. But same time last year, occupancy is way behind, especially in July. Way behind. So that's really what's driving, even though ADRs are much higher, that occupancy lever is having such a high impact on the overall RevPAR performance in this area. So to me, this means I think being more conservative and hedging our bets that we don't want to chase the occupancy is even more apparent by looking at this. So let's go ahead and hop out back to the portfolio itself and take a look. All right, so I'm back on the bookings page. I'm going to go ahead and reset my view a little bit and just take a look at a more granular view of the upcoming summer months to get an idea of where we're pacing. I really want to look into this August month because the ADRs are pretty high compared to pretty low compared to same time last year, and we saw that actually here too. I think, yeah. Oh, actually, interesting. It is flipped in the market. Last year, August, ADRs were much lower versus in the portfolio itself. So I want to take a look at that month, something interesting there. So let me go ahead and reset this view. So I'm going to get rid of the same time last year comparison. I'm just going to hide ADR for a second. Go to the daily view. Keep it on occupancy. I'm actually going to zoom in. I don't really care too much anymore about March and April. So I'm going to zoom in a bit here. So now we can see May and onward into summer and into the fall. So real quick, what I'm seeing, definitely a lot of activity in the last 2 weeks in late May and then into June as well, especially in the middle of June, and then 4th of July weekend also. Let me bring back ADRs here. And let's see, in August, real quick, actually, I wanted to do this. Where was that? Yes, so August 6th last year at this same time, we were seeing some pretty high ADRs, actually above $1,800 for whatever listing that was. That's probably an outlier. I'm not sure exactly what that was last year, but good to see where that was coming from. It's not like overall across the month. It's just from a specific date, maybe a non-recurring event or something I'm not aware of. But generally, we are hitting sellouts and almost sellouts here in May, so that's good. Definitely, there was a big gap here from May 27th to the 29th in occupancy, but as you can see in the last 2 weeks, how that's filled up and actually brought itself up more in line with the surrounding weekdays. Same with right after the last weekend here in May as well. Definitely a big gap here. But I generally am liking what I'm seeing for this group. It's the slope down is gradual. There's not a cliff that's falling off, and I'm seeing the last 2 weeks at least really extending out into July and then into August, which is what I want to see right now. We're well within that prime booking window for July, as John went over, in his first video, going over the July heuristics for the season window. So in general, I think we're well within that peak window, except for maybe the one bedrooms. We're still a little bit far out. I believe it was about 40 days for those one bedrooms. But yeah, I generally like what I'm seeing. There's definitely some gaps in occupancy, especially like right here, June 16th. I'm seeing not much activity in the last 2 weeks, not much occupancy. And then clearly in August, weekday differential. So maybe we want to check in on the weekday rates because these ADRs are a bit high on the weekdays. So just maybe checking in on August weekday rates, see if we need to come down a little bit, I think will be next steps here. All right, I've hopped over to the calendar and pulled up the Charleston properties that I was looking at on the bookings page. And I'm going to go ahead and remove some of these properties that are pretty blocked by adding an additional filter. So I just want to look at the properties that in the next 30 days have less than 7 nights blocked. I think that should be good to remove some of these. There we go. Definitely removed some of the ones that are just completely blocked. And then I was curious to look at, end of May. Oops, wrong page, sorry. Go to end of the May here. Yeah, it looks like like I expected, some adjustments had been clearly made to this time frame. Just purely based off of what I was saying in the daily pickup report right here. I would say that's like not a normal amount of pickup if someone wasn't intervening, just based off of what I'm seeing on the other weekdays. So someone's already been in here kind of adjusting things to the minimums. It was clearly a low demand period that we were just pushing for occupancy for, and I think it's a good idea. And looking at the key data, visualizations, and then the Wheelhouse, available booked nights, I think it's very apparent that pushing for occupancy in these months is going to help us perform overall just better from RevPAR performance. That lever on occupancy is going to go a long way. And so, yeah, that makes sense to me. Looking ahead at some of these other nights, so I actually want to maybe hone in on what's been happening maybe more in the short term, since I'm the first person to have looked at it in a couple days. I want to check in on June 18th weekend, actually, because that's picking up quite a bit. Actually, that's not even the weekend. That's a Tuesday, June 18th, that we're peaking here. You can see if I zoom in a little bit. Oh, sorry. I'm in the wrong... Oh, no, it is June 18th. I thought that was July. Okay. So, yeah, June 18th here. It's definitely been picking up a decent amount in the last 3 days. Been pacing really good on the last couple days. Taking a look, there were some adjustments made recently, so I think that's actually what's happening here. So that makes sense to me. And yeah, I don't know if I want to touch these too much, because I don't mind getting that extra occupancy. And what's interesting is, if I turn on the Wheelhouse demand heat map, these dates that we're peaking for aren't particularly high demand in the market, but we're capturing some decent occupancy, and rates aren't floored all the way, except for like this property here, but not like the rates aren't floored, and we're picking up. So I don't know if I really want to hinder that. This one's not picking up. The minimum seems pretty high. So I might not even touch these, actually, just because it doesn't appear to be super high demand in the market. And the adjustments really only started happening after we made, the compression really only started happening after we made some adjustments there. So I don't really want to stop that. The other area I wanted to look into, just based off of this, is August, the weekday rates here. So let's go ahead and jump to August. Let me collapse these columns again. And just take a look. So yeah, July's definitely been adjusted, but not much. Actually, beginning of August was adjusted not too long ago. And we can kind of see a bit of pickup happening, but these weekdays are really the concern for me. So let me actually do this. I know it's a lot to look at, but I actually like to see the demand heat map sometimes. I mean, clearly in the market, high weekend demand, right? I mean, it's generally what we're going to be seeing, and things really start to fall off. Actually, no, even the weekends into September, yeah, they're doing really well. Oh yeah, I remember this from my initial observations for the market area. Fall actually is pretty strong. Let me just take a look at a couple of these properties. So I'm going to select August and use this. Let me move my face. I'm going to use this little chart to try to just check in on some listings here. Yeah, I mean, already pretty big weekend, weekday differential in pricing for most of these properties. Oops, I messed it up. I need to click this again. There we go. Downward trend as we go through August here, but still very big price difference. Makes sense. Generally, rates are pretty low, especially in the beginning. Or sorry, this is the end of August. So yeah, I think rates are positioned fine. It was a bit concerning to me, but I think that adjustments have been made already and taken into account. So that's good. I think that's a really good position to be in, is being a bit conservative there. So it looks good to me. I don't know if I'd make many other adjustments. The one last thing I do want to check in on is the very short term. So let me see here. Today's the 16th, so let me zoom in. This upcoming weekend is 17th and then the 24th, Memorial Day. Almost sold out for this group. Let me jump back to the calendar. Jump to today. Move my face again. We can see this weekend's basically sold out. We have one night left to sell here. Let me turn off the demand sensitivity again so we can actually read that. One night left to sell. Surrounding dates are booked. This weekend, adjustments were made here. This rate's pretty high, but we did drop to a one night. What size of place is this? Where'd that date go? Ah, here we go. 5-bedroom. Yeah, 4-bedroom. It's a bit high. I might bring this down, considering where the other days booked at. Even if this is a one night, it is Memorial Day weekend. Let's see, how have we been booking? I haven't been picking too much in the short term, picking up too much. So this is coming up next weekend. I'm going to bring this down a bit. Just a little bit more. Let's bring it under 1,500. Probably will need to come down further. Be nice if we could book it at that rate. And then same for this here. One night gap on a Thursday. I'm going to adjust this down like 15%. Okay. The short term, and then we just have the weekdays, which I've already looked at, that someone's adjusted. Okay, not looking bad. The one last area I wanted to check in on is the Asheville area. So let me go ahead and use the tag. Might need to reset the market filter, get rid of that. And then let's hop over to the calendar and do this as well. I think I have I'll just use the tag here. Get rid of the Charleston filter. All right. So let's take a look at the pickup here. Zoom in a bit. In the short term, we're actually sold out for Memorial Day. Makes sense. This upcoming weekend is almost sold out. Adjustments made pretty recently. Pushing the rate here. I don't know if I really like pushing this hard in the short term. Considering like where the rates were, although we did drop the minimum stay, so I see the logic here. So I mean, we could try. I don't know if that's going to sell or not. I'll probably make the adjustment today just because it's going to take a minute for this to come in anyways. Let's bring it down a little bit. We dropped the minimum stay, so I don't want to be like too aggressive with that rate cut there since it's one night. Blocked and sold for Memorial Day. Lots of pickup here in early July. I was really wanting to look at the 4th because it's on a Thursday. It should be pretty strong, but occupancy is pretty low. There has been pickup in the last 2 weeks, but still not pacing super well. Let's compare to same time last year. Oh, these properties weren't really around, so okay, can't really use that. But let's take a look here. The 4th, adjustments were made pretty recently. Minimum stay for Gap Night was brought down here. Rates are pretty high for some of these, but we just brought pricing down, so I don't want to like double dip and push too hard. Let me see, last 3 nights. We've even picked up some occupancy, so that's a good sign. I'm going to leave the adjustments where they're at, but this is something I want to keep my eye on because you can see the surrounding dates are like highly occupied, but not 4th of July. ADR is pretty high though. Obviously, we're trying to push rates, so but ADR is not as high as even July 12th and 13th, and the occupancy is actually just a little bit higher here too. So it's that's a little concerning to me, but adjustments were just made, so we'll keep our eye on that. I am a bit curious to take a look at the 4th of July and this period here in the market and see what occupancy and ADRs look like. So I popped over to this market area. Again, this is going to be a bit more broad, pulling in a wider range, but I am curious what the occupancy looks like over the 4th. So here's the 4th current occupancy in the market. Definitely peaking a bit, but not too crazy yet. Average nightly rate. We can see they're definitely, ADRs are definitely elevated, especially throughout the week. So the 4th is on Thursday. And so it's elevated kind of throughout this whole week here. What's interesting, ADR actually is peaking on that July 12th weekend in the market as well as the portfolio, although occupancy is behind a bit. Asking rates, again, 4th of July elevated throughout the whole week. Asking rates for that July 12th weekend are not super aggressive, even though the ADRs being captured are. Wonder if this differs for any bedroom types. Not really, kind of the same story for all of them. Interesting enough. So this could be an area of opportunity. Let me go back to the portfolio. July 12th, we haven't seen any pickup here in the last 2 weeks. So that's something I do want to check on. Rates were adjusted recently for this weekend, and we're like almost sold out. So not almost sold out. I would say a good amount of our larger homes are sold, I guess, and then we have a block here. So we have 3 full weekends left to sell, and then some gap nights, and then split weekends. But rates, again, were just brought down, so I don't want to be too aggressive. This is one I would probably set a reminder to come back and check on, which I'm going to do right now. I'm going to select all these properties. I'll move my face too. I'm going to leave a note. Check back on 7/12 weekend to see if any pickup has occurred. If not, let's probably drop a bit more. If so, potentially raise rate position. If the pickup is minimal, I may just opt to leave the rates where they're at. If it's pretty aggressive and we only have a couple left to sell, then I'll get more aggressive with the rate increases. So I've gone ahead and set a reminder for a week from now, and I'm attaching this note to the calendar so that it'll show up for other folks. So looking ahead though, August 16th weekend, not too much in the last 2 weeks. We're starting to fill in, and we're seeing a steady pace. Really, this is what I want to see. I want to make sure that we're just not stalling, pushing, making sure we're in a solid rate position so that the flow of bookings week over week is just steady enough so that we're going to hit a sellout at reasonably high rates, right? We're not being super aggressive in most areas. In the areas that we were being aggressive in, we have brought down the rate position in the last few days. So if I hadn't seen those adjustments on the calendar already being made for like 4th of July, this weekend here, the end of May, especially like in the short term, of course, then I would have intervened and gone in and adjusted those on the calendar. But I don't want to change too many variables at once, especially on those nights where we change the rate and change the minimum, like the stay. It's harder for me to interpret the results if I change too many things at once, especially if someone else has already been adjusting things in the last couple of days. So Overall, I think things are looking pretty good as far as pickup goes, specifically in Charleston and the Asheville area. I didn't get into some of the other smaller markets like Lake Norman and a few others, a little bit less properties in those areas. But generally, I like what I'm seeing pickup wise. And so, yeah, hopefully this was helpful. Hopefully my analysis on the market was useful for key data, and then also using Wheelhouse's market intel page. Hopefully you maybe picked up some just tips and tricks on navigation as well, because I know those things are really helpful on how you navigate the platform overall for speed for daily use too. So yeah, catch us on the next one with John deRoulet as he picks us up for the 7th episode. Thanks.